You're listening to Seven Horns AI, your AI-powered market update. It's Thursday, June 4th, 2026, and we're bringing you a midday market check as trading continues. U.S. markets opened to a mixed picture this morning, building on a cautious overnight session in Asia, where both the Nikkei and Hang Seng Index closed down about 1.4%. Early European trading also saw S&P 500 futures pointing lower. However, as the day has progressed, the U.S. market is presenting a sharply divergent picture. The Dow Jones Industrial Average has moved notably higher, up an impressive 1.82%, now trading above 51,600. In contrast, the S&P 500 is little changed, gaining 0.33% to trade around 7,578. Meanwhile, the Nasdaq Composite is essentially flat, ticking down just 0.21%. This is a clear rotation trade in action, with money moving out of some tech and growth names and into more cyclical, value-oriented sectors. The single biggest catalyst helping to buoy the broader market is the notable drop in oil prices. Looking at the drivers, oil is certainly the story of the day. The USO Exchange Traded Fund, which tracks crude oil, is down over 3.16%. This reflects Brent crude tumbling 2.7% to trade at $95.21 per barrel. This easing of inflation fears, which had flared up due to renewed U.S.-Iran tensions, is providing a tailwind for transportation, industrials, and consumer names, particularly those dominant in the Dow. In individual stock action, the mega-cap technology complex is actually holding up quite well, bucking the overall tech softness. Google is a notable leader, up 3.45%, while Meta Platforms has gained 2.36%. Amazon is also solidly in the green, up 1.58%, potentially benefiting from lower fuel costs. Even Nvidia is showing resilience, up 1.50% despite the broader sell-off in the semiconductor space. Only Tesla is modestly lower, down less than 1%. However, beyond the megacaps, the AI and semiconductor trade is indeed taking a hit. Broadcom is the session's headline casualty, plummeting 14.72% after disappointing Wall Street on its long-term AI sales targets. This has dragged down the entire sector, with Micron Technology falling 6.52% in sympathy. Other notable tech losers include Fabrinet, down 10.3%, ARM Holdings, down 9.7%, and Arista Networks, which has declined 9.0%. Even CrowdStrike, despite beating profit expectations, saw its shares fall 6.14%, indicating a good news priced-in reaction. On the gaining side, we're seeing strong performances in biotech and genomics. Intellia Therapeutics is soaring, up 14.29%, while Beam Therapeutics has rallied 10.16%. Navitas Semiconductor is also a standout, surging 19.3% on news of a new partnership with NVIDIA. These gains suggest that while some parts of the AI trade are correcting, buyers are still selectively finding opportunities. As we head into the afternoon, all eyes will remain on the ongoing sector rotation and the stability of oil prices. We're also watching the labor market, with investors digesting jobless claims and challenger job cuts reports which influence rate hike speculation. After the close today, Lululemon is scheduled to report earnings, which could provide insights into the consumer spending landscape. Looking ahead to tonight's Asian Open, the picture is somewhat mixed. Both the Nikkei and Hang Seng had a challenging session yesterday, closing down about 1.4%. However, Hang Seng futures are showing a modest bounce, up about 0.8% above their cash close. This suggests that while there was weakness in the previous session, the U.S. market's mixed performance today, with the Dow rallying and oil prices falling, could offer some counterbalance, potentially leading to a more constructive tone for Asian traders. That's your midday market check from Seven Horns AI. Stay sharp, and we'll catch you at the close.